Facts. In this video, we're gonna laser in and fine tune the correct way to calculate cost of goods sold and ending inventory under the FIFO method. And guess what, gang? I'm gonna teach you an easy and shortcut way to calculate those answers. But first, okay, as of now, we should already know that inventory is one of the most critical assets for a merchandising company because it allows the company to generate revenues and earn gross profit. Throughout any given period, inventory is constantly being purchased and sold at various amounts. At the end of the period, an issue arises in where we have to calculate the cost of ending inventory for the units we have left that will report on the balance sheet and the cost of the goods sold for the units that we have sold that will report on the income statement. And so in this video, we're going to utilize the FIFO method. FIFO basically means first in, first out, which equates to the first set of inventory being purchased throughout the period will always be the first inventory to be sold. So without any further ado, let's take a look at a problem identifying the FIFO method under the perpetual system. Okay, gang, we are ready to rock and roll and utilize the shortcut approach in calculating the cost of goods sold and the cost of ending inventory under any of the following costing methods. But first, we have to acknowledge the fact that we are using the perpetual system. And when we use the perpetual system, gang, inventory is always adjusted on the books after every purchase or sale. Therefore, when it comes to assigning the cost of inventory or the cost of goods sold, we have to break the sales down in a chronological fashion from a sale to sale basis. But before we start doing the FIFO calculations, let's first find out how many goods we have available for the period or how many goods we've sold for the particular period. So in terms for calculating how many goods are available for the period, and I'm going to shorthand right here, available, all you simply do is take beginning inventory and add up all the purchases made throughout the period. So on this list, gang, you can see that we started out with 20 units in beginning inventory. Then on the 12th, we made a purchase of 5 units. Then on the 23rd, we made an additional purchase of 2 units. And lastly, on the 25th, we purchased 5 additional units. So if we add up the beginning inventory plus those 3 particular purchases, we know for the period, we have 32 units available. Now all we have to do is calculate the units sold throughout the period. And that's easy as well, gang. We're going to add up all of the sales. So as you can see, we have 2 particular sales, one on the 20th and one on the 30th. The sale on the 20th, we sold 10 units. And on the 30th of January, we sold 8. So if we add up all of those sales, the units sold will come out to the sum of 18. And from there, it's all downhill, gang. Because if we have 32 units available for the period and we've sold 18, we obviously know if we subtract the 2, that will tell us how many we have remaining in ending inventory. So 32 minus 18 will give us 14 units in ending inventory. Now here's the deal, gang. Regardless of what method that we use, whether it's FIFO, LIFO, average cost, or specific identification, this info will not change. We will always sell 18 units out the period, and we will always have 14 units left. The difference will come in with the methods in terms of the cost of those units. Okay, first things first, before we get started, I want you to understand this clearly. This inventory list consists of both purchases and sales. The purchases is at the cost of what we paid for, whereas the sales is the selling price. Remember, gang, in a merchandising company, we always sell at a price above what we paid for it. And since we're only trying to calculate the cost of goods sold and the cost of ending inventory, we are not concerned at the moment with the selling prices. And as you can see on January 20th and January 30th, they have selling prices of $30. So I'm gonna just scratch those out just to eliminate any further confusion because we don't need them. Now, I always suggest start accounting for the cost of goods sold first, regardless of what method you do, because it's easy to back into the ending inventory. So we're going to start with our cost of goods sold as we apply this FIFO. So, because it's the perpetual system, we have to separate these sales and account for them in a chronological fashion. So we're going to start with the first sale. What's the first sale on this list? Obviously, it's on January 20th, the sale of 10 units. And so we sold 10 units, and the object of the game is to figure out, of those 10 units we sold, how much did each of them cost us? Where did they come from? And since we're practicing FIFO, FIFO tells us the first thing that came into the business, the very first purchase, will always be sold first. So with that being said, as of the 20th, we only have two choices of where those particular inventories came from. We have beginning inventory and we have the purchase on the 12th. So if we're practicing FIFO, we always start from the top, gang. So those 10 units that were sold must have come from beginning inventory. Therefore, all 10 units out of beginning inventory had a cost of $10 each, which gives us $100 total. Okay, now in terms of our beginning inventory, which we started out with 20 units initially, we just sold 10, therefore we no longer have 20 units available. We now have 10 units remaining, gang. And so that's it. We're done accounting for the sale on the 20th. So now we could move on to the following sale that took place on the 30th, the second sale. So this second sale, gang, as you can see, we're at the bottom of the list. We sold 8 units. And the object remains the same. Of those 8 units, how much did they cost us? And where did they come from? We're practicing FIFO. FIFO always means the earliest purchases are the first to go. So of those 8 units, as of the 30th, what's the earliest purchases that we have remaining? You got it, gang. I feel it. It's beginning inventory once again. We have 10 units remaining in beginning inventory, and that's the earliest purchase. Therefore, these 8 units that were sold came out of beginning inventory, and it cost $10 each, which gives us a total cost of $80. So there you have it, gang. We've quickly found out of the 18 units combined of the 2 sales, how much they cost us in total. Therefore, our cost of goods sold number that's going to go on the income statement is going to be the sum of the both sales. We had 100 on sale 1 plus 80 on sale 2. So that will give us a total cost of goods sold for the period of $180. Now we aren't finished, gang. We now have to calculate the cost of the goods that we have remaining, the cost of our ending inventory. But before we move on to that, let's adjust our beginning inventory. Remember, we started out with 20 units in beginning inventory. The first sale, we sold 10, which gave us 10 remaining. The second sale took place, we sold 8. So we no longer have 10 remaining in beginning inventory. We sold 8, so therefore we only have 2 left, gang. Now we can calculate our ending inventory. And here's the deal, gang. As I mentioned earlier, the units in ending inventory, the 14 units we have left, that will stay the same regardless of what method you practice. So we have 14 units remaining in ending inventory. And since we know that when we are practicing FIFO, the earliest purchases come from the top of the list, therefore our ending inventory will always sit at the bottom of the list. So you know what that means, gang? We're going to account for the ending inventory from the bottom up. We're going to go from the bottom up to account for these 14 units. So, of these 14 units, where do they lie? Well, starting from the bottom up, we had a purchase on the 25th of 5 units that we didn't touch. We still have all 5 of those units remaining at a cost of $20. That leaves us with 9 units left to search for. If we keep moving up the list, we saw on the 23rd that we had another purchase that we hadn't touched yet, we hadn't sold, of 2 units at $15 each, gang. So, how many more units do we have left to discover? 7. And we keep going up the list, gang. On the 12th, we had another purchase of 5 units that cost us $12 that we never sold, which leaves us with 2. And last but not least, we all know where those 2 units remaining come from. They come from our beginning inventory, gang, at $10 each. So all we have to do now is simply add up the total cost from the various purchases. For if we add those up, our total ending inventory, that gives us 210, gang. So what does that basically mean? Ending inventory on the balance sheet will have the total amount of $210. Cost of goods sold on the income statement will have the total amount of $180. And it's just that simple, gang. We have quickly, in a shortcut way, calculated our cost of goods sold and our cost of ending inventory under the FIFO method. And if this makes sense and you are ready to master the next method, please feel free to like, subscribe, and share to this channel. It's always my pleasure to help, and I'm glad that you spend your time with me. See you soon. Bags!